Good morning, good morning. Can you guys hear me? How's the sound now? Good. It's strange. The software muted it. How are we doing? Oh, finally got some liquidation, eh? A lot of people will be very surprised at the selling, but when you look at the larger picture, you see, we still have this big gap underneath us, another little gap here, and this massive move up. So basically, what's going on is we ran out of buying over 77.52. So we had to put it on sale. Really, really simple. Um, Markets aren't complex. You're distributing a product, and when the product runs out of buyers, you got to put it on sale. So overnight inventory is short, right? We still haven't taken out this low here. One thing I'm just, good morning, everyone. I'm just running through this as I see it, right? The thing is, Ian, even though there's not a lot of liquidation right now, right? I mean, a lot of good trades, right? If you're a look below and fail trader, it's frustrating the last two sessions because we keep going lower and lower and lower, right? But you have to think of it as your trades are being transported down to an area where you can do business, right? After this liquidation, it's going to start going back. It's going to start going sideways. It always does. That's just how markets are. And so we still haven't taken out this low here. And that's at, where is that? 77.24. We stopped just short, right, of this little swing. That's the lowest low of this distribution. So if we took that out, you'd accelerate selling downwards, right? So far, we haven't taken it out. A bunch of short coverings coming in. Because remember, if you look at the profile from the 4th, remember we had all those areas of short positions? So there's one here, there's one here, there's one here, and then, of course, the gap lower, right? So there's still 3 unfilled short positions underneath us. There were 6, right? 3, 4, 5, 6, oh, 7. So out of the 7, we filled 4 short positions. We still have 3 unfilled short positions. Excuse me, say that really fast. We still have 3 unfilled short positions underneath us, which are providing support right now. Okay? So this liquidation is nothing but a liquidation. It's not, oh my God, the world is ending. Remember, we had this massive move where we gapped up over 75.11, right? And completely took everybody by surprise going into August. Now, the middle of the month is here. Next week will be month end. So this week, what? Remember, the night market is when the shorts can cover, right? This is an opportunity for people who got trapped short. Now, I'm talking larger traders, I'm not talking retail. The people who got trapped short a couple of 100 points lower, who had the capital to average up here, they're going to come in and start doing some buying, and they get to cover, right? They get to cover their position with a little bit of dignity, right? Because for the last 2 weeks, if you were short underneath 7,600, you really had no dignity, right? You were looking like Jane Street when they took that $15 billion loss in July, right? You know, a good thing they made 40, right? It's a good thing they were up 40, so 15 wasn't that, but still, $15 billion is a lot of money to lose in a month. So, you know, these markets are very, very outsized in their ranges and risk. The numbers being thrown around are very, very scary, right? Are we long biased here? No, we're not. What we are, Jay Reardon, is we are looking for the bid. Okay? Let's go see if we found it. Okay? These liquidations, what they do is they give you an opportunity to get some better price action. Okay? That's what really they're doing. They're giving you an opportunity to get better price action because liquidation is the sort of it's almost like lubricating the market, greases the wheels, right? So the bias that you would want to use, Reardon, is sideways. Okay. So I came up with this balance zone of 33 quarter to 37, right? We are going to encounter resistance as we move up here into your upper stops in the 40s. Okay. So let's map out the field before we get a bias, right? So a common mistake that traders make is they get a bias before they've looked at the field, right? Everybody does it, right? Oh, it's gone up really high, let's get short. It's dropped really low, let's get long, right? These are natural things that people will go through. Now, what you want to do is you want to map out the playing field so you can make some intelligent decisions, right? That's after a big liquidation like this, look for sideways, and we're getting sideways in this balance zone here. So if we stick 37, London's going to open in 4 minutes. When London opens, we're going to see whether or not it takes out that low at 34. Does that make sense? Right? So the way I run my business is I don't come in and say I'm biased, I'm going to do this. I come in and say, let's look and see where the bids are and where the offers are. Okay. So there were sellers up here right at 38. Those sellers are seeing buyers. You can see there was a seller here, here, here. Now the offer is lifting over 38. The next set of sellers are going to be up here. So if you're a retail trader, right? Say you don't have $100 million to put to work tonight, right? Most of you are trading prop accounts, your own account, 5 grand here, 10 grand, maybe 50, 100 grand, who knows? You don't have a lot of room to make mistakes, right? So what you want to do is you want to use your head. You want to be smart. Don't be like one of these emotional people who chases price like a dog chasing a car, right? Have a little smarts. Sit back, look at the playing field, look at where you can make good business decisions. Does this reverberate with you guys? Do you guys understand what I'm saying? Right? So now you know you see there's a seller at 39 quarter. Okay? Give it some time. Don't just jump in and start throwing your money out the window, right? Wait until the market gives you a legitimate reason to do business. When that happens, take the trade and execute ruthlessly. If the trade doesn't go your way, get the hell out of it in a ruthless manner, right? This is not a market to screw around in. I've been telling you guys for months now that you're going to have to be on top of your game, right? See that 39 quarter seller, right? So just sit back and watch, right? Once you learn how to sit back and watch a market, you're going to be able to calmly make good decisions, right? If you're all like, oh, I got to trade, right? That's not healthy, and it's not healthy for your money, right? Anybody see Bonfire of the Vanities? Tom Wolfe wrote the book. A nervous salesman is a dead salesman. A nervous trader is a dead trader, right? Sit back, relax, let the trade come to you, okay? Bonfire of the Vanities, very famous book about a bond salesman. We're getting a little bit of cleanup here. So there's some short covering coming in. Now we found the bid. See? Nice. Nice, nice, nice. Now when London opens, usually London will come and sell the market down. Right? So we filled those single prints, we ran out of supply. So as the market starts moving higher, you're going to start seeing a little bit of resistance as we come into this 42 area. Oh, hey, Belgium, cool. Tout va bien ici. Merci. I have a good friend in Belgium. There's the seller. Okay. Oh, Dell. Hey, man. Good to see you. How are you? Well, you're not in Cuba anymore. Cool. There's the seller, right? Remember I said when London opens, they usually come and sell. Now let's see if we hold the 39s, right? If we hold that 39 bid, there should be a little bit of buying right at the bottom here. But why is that? Because the position is just here, right? The next position is here. So let's see if we hold 39 and rotate back up. Or do we go sideways? Let's see what happens as London comes in. You can take a little test trade here if you're long 39s, right? I'd use 38 half as a stop. I wouldn't blow a lot of money on this trade. Take a test, go small size, right? Because you're testing whether or not you're seeing things properly. Always use test trades when you first start trading the day, just to make sure that your brain is working, right? There's nothing wrong. There's nothing wrong with using a couple of micros, take a test trade, see whether or not you're seeing things properly, you know, and if not, then reassess. There's no reason for you to go and lose $200-300 trading the first thing off in the morning. It's better to lose 20 or 30 bucks and see whether or not you're seeing things properly. Also, you're wanting to make sure your execution is good, right? Now, the overnight point of control, which means where the inventory is priced, is all the way up here in the 67s. So we will want to move that down, right, to show good absorption, right? Because we want to get all of that volume up here We want to buy all that down here so then we can take it back up and resell it. So right now, just chill, right? Just relax. Mark where your stops are, do all that. So it's a little choppy here. We found some bids just here at that 38 level. So it's kind of futzing around. It's not really a clear trade. If you're long 38, 39, you might have scratched already, and that's okay. After a big liquidation, it takes time to soak up all the overhead volume, right? And we have single prints, we have areas of supply on the way down. So you just go and mark those off, right? So I'm looking if we hold 37 because I just drew out these levels. So the first thing I want to do is I want to see if my levels are working, right? Do we get a bid at 37 and a quarter or do we just break right through it? Right? That's what I'm looking for right now. 39 did not hold, right? So just nice and easy. It's first thing in the morning, right? As they say in New York, no reason to get all hyperactive, right? Chill out, have your coffee, right? Yeah, Del, the order book is thin, right? And the order books have been thin now for about 2 years, but especially now, right? Which means a size order can really move this market, right? You got 20 or 30 contracts at every tick in the ES. That's not a lot, right? So these markets are thin, which means you really want to be picky about where you do business because you can get thrown out of a trade very, very quickly, right? See if that 39 bids again. You know there's going to be a seller at 40 where I drew the white line. They sold there before they will sell again. And then they will sell up here, right? What may happen is we might go between this stop and this stop back and forth for a bit while we clean up the overhead supply. Let's see. If you are long 39 again, remember just to put your sell orders out so you do sell into strength, right? What did I say about 67? That's where the inventory is priced right now. We'd like to move that lower so we can buy it cheap and then take the market up. So you're long 39.5. Put a seller order out at 41.5 and see if you can get filled. They took me at 41.5. Let me see if they can take me at 42. Otherwise, I'll lower the offer. Right? So nothing done at 42. Let's go 41 and 3/4. Long 39 and 3/4 on that last contract. And let's see if we can get a print. Otherwise, I'll hit the bid. If I see the offer come under, hit the bid, I'm done. Right? Maybe a little sideways action here. Right? Nothing wrong with that. You have to have um, or develop, I should say, you want to develop the skill of being able to sit and look at a market and do some reconnaissance, right? That's what these charts are for, right? These charts are trying to tell you where they're selling into it and where they stop selling. That's all you need to know. They're selling here. As the market comes down, they seem to stop selling there. See that? Why do they stop selling at 38? Because they see buyers underneath 38, right? Nice and simple. There's no reason to overcomplicate this, right? We can, right? But all it does is give you a headache and you don't make any money when you overcomplicate it, right? Nice and simple, right? Now, you have to think, if I do business here, what am I going to do? And what is the reason for me doing it, right? So if I want to go long here, why would I go long? What is the reason? Are the offers lifting? Or is this a place where I just kind of want to chill out and let the large traders try and bring that point of control down before I take a long position, right? Just take your time. The biggest thing is that you don't feel rushed, right? When you feel rushed in this business, you tend to make bad decisions. And I'm not saying I'm immune. Everyone's done it. We all go through the same spanking machine in this business, right? You're eager to make money. You want to do this. You want to do that. You don't want to feel like you're just sitting there doing nothing. Don't worry about that feeling. What you're doing is you're training yourself to be observant, right? If the market gets to a level, animal, and starts moving lower off that level, that means that there are sellers at that level and they are competing and lowering price on each other, just the way they're doing right now, right? So that 38, no go, right? Went right through 38, okay? So now let's see if we hold that 36. So let's see if you do a long, right? I would like to wait till the next candle, do a long and flip it back up. If it does this, I'll wait for the next candle and see if it holds 37 quarter. If it doesn't, then there's really no trade, right? Also remember, on a night like this, on a morning like this, if you are doing a responsive long after a liquidation, don't get ridiculously greedy, right? So if you do buy this, go put your sell orders out right away. Because if we catch a bid, it's not going to last very long, okay? See the bottom of this candle, nowhere near 37 and a quarter. But there is a seller at 39. So there's not a lot of meat on the bone, and there will be a seller at 40, right? As the day progresses and all that overhead inventory, if we hold that low, right? If we hold our low of what was that 26. If that low holds, we'll just go sideways here, drop all the inventory above us into these bids, and then go and try and sell it a little bit because overnight inventory is what? Well, the point of control still hasn't moved down. So overnight inventory is not 100% short or even 90% short. It's still actually a little long, right? even though it doesn't look it, right? We need that volume. We need like 1,700 contracts down here, right? So, okay, you're long 38, sell one at 39 and a quarter, sell one at 39 and a half, 3/4, get paid, right? You know there's going to be a seller there. So if you did take the trade, take your money, right? Take your money, right? If you know where the sellers are and you're long, you sell before the sellers hit you, right? There's no reason wishing and hoping for higher if someone's selling in your face. That is one thing that retail traders never, ever, ever get taught is to sell into strength because there are other people selling and they're going to take your customer. When you're long, you are a supplier, right? Nothing wrong with a point and a quarter, Moran. Nothing wrong with that at all, right? You know, it's like a couple of $100 on 3, 4 contracts, right? That's actually not why the order book is messy, Dell, but I've got videos. If you go back on my website, on my YouTube, Dell, I've kind of explained the whole thing. Go check it out, or just DM me. I'll send you the stuff I've done. Okay. See now, if you were long 38 and you didn't sell 39 and a quarter, you're underwater, right? Don't don't take things for granted in this market, right? You know, a point and a quarter on 3 contracts is like $180, right? I'll take $180. If you don't want it, give it to me. You know, yeah, 180 here, 200 there, 150 there. It adds up. Next thing you know, you've made $600, $700 that day. You know, it's not glamorous, right? This method of trading that I use, especially with new traders, people who aren't consistently profitable, don't worry about the glamour. There was a guy yesterday, he goes, JJ, why do you take tiny trades? Well, it's because there's no use trying to teach you guys big trades. You don't have the skill or the money to do it. What's the point in teaching you how to make 30 grand in a day when you have a $2,000 account? Right? It's just not possible. It's like trying to win a Formula One race with a go-kart, right? It's just not going to happen, right? So people have to be realistic. It's not a casino, right? You know, it's not like you put a penny in a slot machine and win a Ferrari. That's not how this business works, right? So treat it as a business, learn how to do business properly. Right now, what we're doing is we're looking for the bid and we're looking for the market to come down and test 34. If you are short, you'll want to put some bids at 35 and a half, right? What videos do I explain contracts? You can DM me anytime at on my X. I'm on X. Right. And if you guys are, you can always find me at the Trading Syndicate in our Discord. You know, Steve's doing a 3-day free trial. We understand that markets are really, really hard to trade right now. So that's why we're doing a free trial. Come in for 3 days and check it out. Okay? It's not going to cost you anything. This is a look below and fail of 37 and a quarter, right? So there you go. Once again, if you're going long the 38s, your stop will be just under 37. You know that there's a seller up here and there's a seller at 39. So make sure that if you are going long to get your offers out, right? Make sure you sell into strength, my friends, right? If it breaks 36, scratch, right? It might be a little choppy here, right? As they work out this level, it might be a little choppy. And if you scratch that trade, then you'll be looking for a look below and fail of 33 because there should be some bids down there, right? Thing is, don't overtrade. Don't think that you have to make 30 to 50 points a day. You don't. I can show you a way to make $10,000 a month on 3 to 4 point trades where you're not going to be pulling your hair out, going into debt, losing your house, lying to your spouse that you're making money when you're not. All of the things that retail traders fall into, that trap, we can save you from that. We can show you how to make money using a little bit of common sense, right? And if you have the ability to draw a straight line, pay attention and do what you're told, I can make you profitable, right? You don't need any special software. You don't need anything. All you need is the ability to draw a straight line, pay attention, and do what you're told. If you can do those three simple things, I can make you profitable, right? Now, of course, the more stubborn you are, the longer it's going to take. If you're a really stubborn person and you have a whole bunch of bad information in your head about how markets and trades work, it's going to take a little while longer to clean out your attic, get rid of all the junk, and fill it with good information. Right? So a lot of people say, look, I don't know anything about trading. I want to learn. I'm like, that's even better because you don't have a bunch of bad habits that I have to get rid of. Right? So right now, do you see how it's going back and forth over 37? Leave it alone. There are sellers at 38, 37 and three quarters. There's some bids at 36, but it's not really worth going long until you get over 38 again. Okay? The candles are getting smaller, which means the business is getting slower. Okay? Don't waste your money taking trades that are kind of right? On days like this, wait for the really good trades. Wait for the ones that reach out and slap you across the face, right? And go, okay, here it is. You might have to wait a little while, but it's better to wait a little while than to be down $500 and try to battle yourself back and then be down 1,000, right? So always think in a practical manner. And if you don't know what you're doing, reach out to one of us. I'm always around. I'm around this entire week. You know, if you got questions, join our room for 3 days. There's no charge, right? Would I take it right now? I just said to not take it. How do I feel about the Trader Vic gap rule? Closes gap 85% of the time. I have no clue, man. I don't feel anything about it. All I know is there are gaps from COVID that haven't filled. So I don't know about that. A gap will fill if we have the order flow to fill the gap. I don't believe in just black and white trading rules other than don't do anything stupid and don't lose money, right? So if I'm thinking correctly, Trader Vic was like 1980s trading. Markets have changed drastically. So how would you put a business plan around that gap rule? You tell me that. Tell me how you're going to put a business plan around that gap rule that manages your risk and allows you to take an intelligent business transaction off of that rule, right? I'm all in favor of your rule if you have an intelligent way of transacting business around it. If you do not have an intelligent way of transacting business around that rule, then it's worthless. Yeah, but should, maybe, shoulda, coulda, woulda, right, Jay Reardon? That's meaningless. How are you going to transact that? You know what I'm saying? Okay, it sounds great. So it should close the prior day's RTH close, right? How are you going to transact that so you make money? You know what I'm saying? Because it's all in the execution, my friend. If you can't execute it, then the rule is worth is you know it's worthless. If you have an execution business plan around that rule and you've done it 500 or 1,000 times and you show profitability, beautiful. If not, it's just gossip. You know what I'm saying? You guys understand what I'm saying? Everybody's got these rules and it sounds great and it sounds fancy and that's wonderful, right? But how are you going to do business around it? What is your execution method and plan around it where your risk is looked at? What is the business reason for the trade? Explain that to me. Where's the business reason where you put your risk so you can get out if things go wrong, right? You got to think in a practical way. Otherwise, it's like, saying the rain in Spain falls gently on the plain. Nobody gives a shit. You know what I mean? I'm not trying to be rough with you. I'm just trying to, you know, put some common sense into you. You know what I mean? Right? This trading business is full of all these flowery bullshit rules and things, but nobody actually puts common sense execution into it and shows, okay, if this happens, I do this. If this doesn't happen, then I do this. This is where I put my buy. This is where I put my stop. This is the business reason for buying this, right? So if I was buying 37 and a quarter, 37 and a half, right? The reason is that they don't need to sell under 37, so I'm going to go long and I'm going to sell 38, 39, 40. If they offer it under 37, my inventory is mispriced and I'm out. You know what I'm saying? Jay Reardon is still there. Does this make sense? Right? I have a lot of people who have bankrupted themselves shorting gaps that never fill. And I have seen people lose so much money with these black and white rules that have no business plan. So if you got a business plan, great. If you don't have a business plan, that rule's about as useless as tits on a bull. Right? So game it out, right? Game it out. Should your average wins be more than your average losses? I would hope so, but they're not going to be at first because you don't know what you're doing. So don't worry about that now. Learn one trade and learn it like the back of your hand. So when the market does this, I do this. This is where my risk is. And I need to learn how to do that in various different types of markets. So I understand the subtleties of the trade. Get it? If you guys come into the room, I'll teach you guys this, right? Right? People, when they first start trading and they're not profitable, they're worried about all of this stuff, right? But none of it means anything unless you start to learn how to trade, right? VWAP is much higher, my friend. VWAP's all the way up here at 77.46. So it's a non-event. It's meaningless right now, right? The cost basis is how much you paid for something. Initial balance is the first 2 half-hour periods, right? What is your setup right now? My setup is to have a coffee and relax, and I could care less about the NQ. My setup is to wait for a good business opportunity, and I don't see one right now. Make sense? It's midnight in the US. I'm in the UK. That's why I do this session. I also do a session at 9:15 a.m. for the US traders, pre-market, and into the open of the New York session. So I do both. Remember I said if we lose the bid at 37, you're going to be looking for a look below and fail of 33. Let's see if that 34 stop gets taken out, right? It's choppy. The candles are getting smaller. Business is slowing down. Your job this morning is to see whether that overnight low holds. I usually go in for one lump size at a level that I'm comfortable with and that I see what I want to see happening. I don't use any auto trading. I'm 58 years old and Banner. I've been doing this for 34 years. I've taken 200 companies public and I've traded billions of dollars in order flow. So I do everything manually. So folks, have a great morning. Guys in my room, are you guys still awake? The YouTube crowd is like just popping off here. You guys haven't asked a single question all night. You guys awake? Okay. Just checking. Thanks, guys. Have a great one. Come see us at Trading Syndicate and don't do anything crazy, okay? Be smart about your trades, my friends. Guys in the room, go back to sleep. Get a coffee. Ian, yeah, time to hit the hay, man. 3 a.m. Go get some rest, brother. We'll see you guys.